Welcome back to the SDL. I'm Mitch Ayes.
And I'm Greg Vinogradsky.
And on today's episode, we're pleased to welcome our first in-person guest, Mike Luzzi from People First Property and Casualty. Mike is an insurance advisor and focuses on community associations. And on today's episode, we're going to talk with Mike and Greg about insurance disclosure and purchasing and renewing policies as it relates to community associations. Now, there's a recent court case that came out of the Ninth Circuit. Greg, why don't we talk about what that case is about, and then we can talk to Mike some more.
Yep. So this case was just decided in the Ninth Circuit. It's in California. It's a pretty interesting case that involves a community association that was renewing a policy. And on their disclosure form, it asked whether there was any claims or any potential claims that they may be facing. They said no, and it turned out that they got sued. So it was an interesting case because it kind of leaves you a lesson as to exactly, being truthful and what could happen if you potentially aren't truthful, right? So Mike, you deal with this all the time, right? You're constantly getting applications and trying to renew policies and discussing situations with associations and the board. What have you seen in your experience regarding these questionnaires and any life lessons you might have for the people watching?
Yeah, well, I think this is a perfect example of an association working with your broker, your insurance specialist. You want to have full transparency. In this case, as Greg alluded to, they did not disclose a potential written warning for a potential suit. And in that case, it should have been reported immediately. When you have full transparency, you can adjust on the fly and, get a path of where you can get to for either the claim being paid out or, possible denial or however it happens, but it has to be reported right away. And as far as your other question, every application, you're going to have a disclosure about any circumstances or potential claims that you're aware of, whether that's package policies, D&O, umbrella, workers' comp, etc. So you need to answer that as honest as possible.
Yeah, and I think that it's important, right? It's not just claims that you have, right? It's any claims you might think you have. So if you get a letter from an owner saying, I'm going to sue you, or from a vendor saying, I'm going to sue you, but they haven't sued you yet, you still should disclose that, right?
Correct. Yes, you need to report that immediately, and then you can let it pan out, because in this particular case, underwriting circumstances would have caused the carrier to not release coverage and agree to a contract. In many other cases, maybe they would have agreed to a contract, but there would have been a very higher pricing adjustment. We can attribute that to a possible loss frequency, which are habitual claims that happen consecutively over a year's time. In this case, it seems like it could be a one-off claim, but it still comes back to underwriting and possible changes.
Right. And that's generally what this case kind of fell on, right? Is that the insurance carrier said, we wouldn't have provided coverage, we wouldn't have underwritten this policy had we known this claim was there or hanging over the association's head, right? Which leads us to really the ultimate kind of question is, well, what happened, right? So you had a claim, you didn't disclose it, the insurance carrier found out, and there ultimately was a claim. In the Ninth Circuit, the court decided that the carrier actually didn't even have to provide coverage, right? They didn't have to cover any loss, and the association was still paying a premium, but now not getting the actual coverage that they thought they might have otherwise. So it's a great life lesson that I think every association should really take to heart. Listen to Mike's advice and be truthful, be transparent with your broker and with your association's attorney about what you might be experiencing as far as a claim, and then report that claim properly when you're purchasing new policy or just renewing your policy. Because if you don't, this could happen to you.
Yeah, just to back that up, that's on the liability side, but even in the event of a property claim, if you don't report it right away and you just let things sit and you don't mitigate, if in a general water claim, you might have a denial because it was reported late, and some different carriers have stipulations in the contract that you have to take loss preventative measures to prevent mold and additional damages. So if you just sit back, are not transparent, and wait, you might have a denial at the end of the claims process.
Yeah. So we've always talked about the Ninth Circuit case that we've based this conversation around, but I don't think it's limited to just Ninth Circuit, right? There's people that are watching that are not Ninth Circuit based. So why don't you give us some feedback on that?
Absolutely. I mean, this is pretty across the board. With any state you're in, you're going to see this kind of questionnaire. You could tell me if I'm wrong if you haven't seen it someplace.
Every application, no matter what state.
Right. Every application has this. So you have this decision, and everybody's watching it, right? And carriers are watching it. So they're going to try to push it, and they're going to try to see really what they need to cover. And so it really just lends itself to that relationship that you got to trust a guy like Mike when he comes in, right, to your board meeting and he wants to discuss any potential claims with you, to try to get you the best rate possible and make sure you're protected for any claim you might potentially have.
Yeah, I mean, to save a couple dollars on premium, whether it be 1,000, a few hundred, it's going to be paying that is going to be a lot more beneficial for the association than having a flat out claims denial. Because as the the contract was pulled, you could have also a straight denial or basically minimal coverage. And by being as transparent as possible with your community association advisor, they might know, hey, we have a claim coming in. We have to take this avenue. We might pay a little bit more, but we'll get the job done for you. And in this case, that didn't happen.
So the big takeaway, take Mike's advice, always report, be transparent. If you're in doubt, just make sure you're advising your broker and your carrier so that these issues don't happen to you.
And also work with your attorneys. I mean, we're here as a team for the association. If we're all not talking, there's something wrong in that relationship.
All right, thanks everybody for tuning in to another episode of The Socially Distant Lawyer. Definitely want to thank Mike for joining us
Thank you.
for this episode. And make sure you check us out on our social media platforms, and we'll see you next time.